Greetings fellow traders and welcome to the Art of Technical Analysis. On this channel you will be learning my style of technical analysis. But before we begin, I want to state a disclaimer. This is not financial advice. Everything we discuss on this channel is pure for educational purposes only. Today we're gonna talk about level 5 of the technical analysis methods, the MACD. Although before I begin, I would like to show some stuff which I've totally forgotten to explain in the moving average level. I was so excited for that our prediction was playing out, hence the reason I forgot. Anyways, what I wanted to tell you about moving averages, like I told in the, I think in the first or in the second level of this Academy series, that when you're drawing pattern formations, you're supposed to turn or keep logarithmic disabled. But in this case, this is the only case when we do use logarithmic scale. It's the moving average, because as you can see, the algorithm of moving averages, they adapt visually to the price, to the logarithmic variables of the price. So when the price jumps, it doesn't matter, because it's gonna calculate its point at the current variable anyway. So that's important to know. Did I forget anything else? I think that's it. Let's move on to the MACD. Well, you might have. It's okay to have this logarithmic chart still on. As you can see, doesn't really matter. It won't change. Anyways, this is the MACD oscillator, and what you need to know about this is all based on moving averages. Well, what we are doing is we're comparing the simple moving average and the exponential moving average, and the difference from this outcome. I can actually show you this, so you don't think I'm talking nonsense. But at the first stage, it will compare the difference between the simple moving average and the exponential moving average with a faster or shorter length, and the second time it will compare the difference between simple moving average and exponential moving average with a slower length. And the MACD is actually the difference of these two. So it's not really that complicated, as you can see. Perhaps for some I might understand, I can imagine. And this histogram is the difference between the signal and the MACD, as you can see here. It might be a little small, so I don't think you can really read this on the telephone or on the smartphone. You might want to watch this on the bigger screen. So that's the MACD. That's how it works in detail. So it's not mumbo jumbo or anything. We're actually already using this for a long time. It's just moving averages, only and they're comparing it and they want to see the difference. Well, how can we use this? As you can see here, and the MACD cross with the signal line, and this is a very bearish signal, and as you can see, the price dropped pretty much immediately afterwards. You can also see on the histogram that the trend has become bearish. Oh. Pretty much the same here, only vice versa, of course. Here you can see that the MACD and the signal line are crossing over, crossing bullish, hence the trend going up and the price following it. Oh. Kind of. Oh, that's pretty much MACD. I have based my own oscillator on this algorithm. Although, of course, as you may know, I'm Asian. It's in my nature to take stuff to the next level. And here it is. I call her ME2. It's in short for Epic Market Indicator. You can find it. You can find this at TradingView. I've published this for free. At least this version, so anyone can start learning how to use this. And the beauty of this beautiful indicator, if I may say, is we can actually truly see converging divergence or converging divergence of a bullish or bearish reversals. I will show you now. As you can see here, you can see I call this trend waves. You might have seen this already from other YouTuber, which we will disclose perhaps in other videos. Well, how to read this? I'm gonna show you a little tip, but actually I was planning to do this on a separate video, so. But I will show you a technique, a method that this MACD, it's talking about moving average. That's what the it's short for, moving average converging divergence. But I don't see any converging divergence here. Here, I will show you where. On my oscillator. This is a converging divergence. Actually, to be exact, this is a convergence of a bearish divergence. As you can see, this bigger hill and then showing a smaller hill, and what happened afterwards? Drop. This is what we call a convergence of a bearish divergence. And that's how you truly should use the MACD. But as you can see, you cannot see this anywhere. There are no, you cannot see that. So I'm gonna remove this since this is not my style anyways. I will show you a convergence of a bullish divergence, where ME2 is converging a bullish divergence. That's pretty much here. As you can see, ME2 was already giving a sign of a possible bottom. So now we've got this big hill, big trend wave, pulling it down here, and as you can see, this is a smaller hump. So this is what they call at least this is what ME2 is converging, a bullish divergence. And as you can see, the price went pretty high after that. Wow, it's okay, 40%, not bad. And as you can see here, it was ME2 was already warning for a possible top, and this trend wave showed us that the momentum is slowing down. Not enough volume is coming in. This is something I'm gonna talk about in my explicit videos about epic market indicators. But for now, at least you know how to read a true convergence of a divergence. I bet not a lot of people have told you this, or simply they don't know. I don't know. At least you know how it works. I think that's the most important. And how to, well, make strategies with this. Hence the reason why I've been teaching you guys in this explicit order. Otherwise, you will not understand this, right? Moving averages. If I didn't explain you how moving averages work, then it will all be just noise. So the explicit order, learning this in the explicit order is very important, guys. So I should have, as I told before, everything will lead up eventually to my epic market indicators, ME1 and 2. But first you need to learn how to walk before you can run, jump, and do all the good stuff. Okay, I hope you've learned anything and you've mastered these levels already from the Academy series before moving on, because we're not ready yet. Next level I will be talking about an artisan level of technical analysis, which we will be learning how to use Fibonacci tools such as the Fibonacci retracement and the Fibonacci fence. I don't think a lot of people have explained how this works or aren't actually using this, and it's kind of ridiculous because it's beautiful, beautiful, perfect, consistent and concrete working tool. And guys, I would like to advise, give an advice. If you're using TradingView or whatever, and they got tools, use it, learn them. They didn't spend their money and time for nothing if it didn't work. So I'm gonna leave you guys with that note. Thanks for watching, and well, you know the drill. Please like and subscribe, share this videos to anyone you know, and tick the little notification bell, and I'll see you guys in the next video. Bye.